January has been a particularly difficult month for global markets. Equity indices in Japan and Europe have fallen by about 10%, while the S&P 500 was down 8.8% during the first 2 weeks of trade. Locally, things are no different, with the JSE currently down 14% on its April 2015 high. I'm now joined in studio by Finweek editor Jana Marais to discuss the turmoil in global markets. Jana, lovely to have you with us. Volatility, that is what we can say in terms of encapsulating what's been happening in global and local markets. What have been the factors that have been driving this volatility though?
Yeah, what a crazy 3 weeks we've seen so far this year. I think we should all spare a thought for the traders out there trying to, make head or tails of what's going on. I think the big thing is that people are still very concerned about the health of the global economy, especially China and even the US, where we've seen, quite a recovery, but there's question marks. You see employment numbers rise, for example, but not wage growth. So I think overall, people are very concerned about really the state of the economy. And then, of course, the oil price has just been at lowest levels in 12 years. So there's not a lot of confidence out there. And I think, today we've seen a bit of a rally, mainly thanks to the European Central Bank saying, we will probably, or indicating that there might be more stimulus and sooner than investors expected. And as well as a little bit of a rally in the oil price after some comments in Davos by the Saudi minister responsible for that current prices are irrational and can't be sustained, which I think is true. So so I don't think we're going to see stability from here on. I think we're in for quite a bit of more volatility.
There's been a lot of negative sentiment around emerging markets. So just referring to a note that came out of Goldman Sachs today, saying that they're really not urging their clients to be increasing their exposure to emerging markets. South Africa being an emerging market, and the JSE, of course, not being spared. What is your advice to South Africans? Is there any way they can mitigate this outflow of cash?
I suppose that's the million-dollar question, right? I think one of the big, probably the only thing we can do from a national perspective, I think Larry Summers, the former US Treasury Secretary, said it best, and that was confidence is the cheapest form of stimulus. And given the state of our finances, I don't think there's a lot of money to be pushed into the economy from government's perspective. So we really have to work on the confidence side of it. And I think we look at investor confidence often and regulatory certainty and all of that, but it's also consumer confidence and business confidence. And I think there, Pravin Gordhan will have a very tough job in February, and all eyes will be on him from what he's going to say in that budget and what they've got planned to try and stabilize the situation, avoid a junk rating downgrade and all of that. And I think from a retail investor perspective, it's a very good example of why it's so key to have a diversified portfolio, to be invested in blue chip companies, the likes of British American Tobacco, the Steinhoffs of the world, and you basically have to ride it out. So sometimes the best advice is to just do nothing, especially if you know that your portfolio is well diversified and you're invested in blue chip assets.
So keep calm and stay diversified.
I suppose that's it.
Thank you so much, Jana. That was Finweek editor Jana Marais. We're taking a very quick break, but when we come back, we'll be looking at disruptive business trends and how these models are impacting the country's financial services industry.